All right, welcome back. Week 2. Nothing's changed. This is still a no BS zone. A lot of you did the homework. Some of you email me reasons why. That's okay. But to get the most out of this, I need you to do the assignment sometime during the week. All right, after last week's session, the way it went, obviously realizing 2 hours is not enough. Still going to do 2 hours, but I'm going to extend the cycle. I initially thought it was going to be 6 to 8 weeks. Obviously, we're going to be 8 to 10, perhaps 12 weeks. The cycle will run. All right, and the bottom line is however long it takes till I get through the material that I feel you guys need to see what you need to see. All right, last session, I didn't think it was that great, but a lot of you wrote me some emails and said that you had an epiphany. You saw the light, the switch went on. That's great. That's the point. So whatever it is, whatever piece that I give you that's missing or whatever aha moments you have, that's the whole point of these. And I want what's best for everybody, and that's to make some money trading. All right, chat box. Chat box is going to be ignored till the end of the segments. I'll do a segment. I'll open the box back up and take a look. I'll take a few questions that are relevant to the stuff that I'm talking about. Okay, you asked me about the AJ chart or some other totally should I say off-topic thing. I'm not going to answer it. Okay? So work with me a little bit. We're going to talk about a segment of stuff. Ask me a couple questions at the end. All right, what I need from you, which is for some reason this is absolutely too hard for you guys, this is what I need. Back to managing your expectations. I expect you to follow along free from distraction. I asked you that last week and people were trading and doing their taxes and asking me about charts. What I need you to do is just can you pay attention for 60 minutes, take a 5 or 10 minute break and then give me 60 more. I just want 2 hours a week. All right? Listen, I'm a person too. Don't forget, when you ask me stuff like, I'm sitting here talking, I wrote this shit all week, I'm excited, Heidi turned it into slides and I'm here, and then I'm sitting here pouring my heart out to you guys and you ask me some shit about some chart from 10 years ago. That hurts my feelings, man. All right? It also hurts the class, hurts you, and slows the pace. So, like I said, give me 2 hours a week. Make an honest effort at completing all the assignments on time. Execute anything we talk about in demo until you master it. Refrain from negativity in your own mind. That's the hardest thing to do, is for you to refrain from negative thoughts and negative concepts that are bringing you down. I assure you that if you could put all this stuff behind you, all your baggage, you're going to start to have success. Take your time to really soak up the information. Rushing to get finished is exactly what I don't want to see, man. Okay? Just 2 hours is all I ask. Full attention. Focus. All right. Mention again. Stop trading live during this time. Give yourself a little break, man. Remember I asked you in the survey, do you have a plan where you can take a few weeks off, a month off, away from trading and focus? Okay? That's what I need you to do. If you're trading live right now, this is for you. Switch to demo until you see a marked improvement in your trade selection and chart vision. It's going to happen, man. You're going to have your moment. I don't know when it's going to be. It's different for everyone. Okay? Stop feeding these guys. Okay, quote of the week, very important. I had a couple emails where people were very upset with themselves or mad at me for that matter. And it occurred to me to tell you guys this. It's very important. One trade, win or lose, should not define you as a trader ever. You should not have a losing trade that eats into 50% of your equity. Shame on you. You should never have a losing trade that eats into 25% of your equity. And if you have a trade that doubles your account, don't become full of yourself. Okay? One trade should never make or break you as a trader, as a person, as a father, as a wife, as a husband. Okay? Your climb should be slow, steady, and clean. 2% risk. Double your demo account. When that happens, move on to the next segment of the journey, which is to do that live. All right. Student mail. I'm going to go over some mail that came in, talk about some things. But I want to preempt this. Abusing the instructor will not make you a better trader. Denying that what I know is real to yourself, if you just can't admit it, it keeps you paralyzed, and it favors the reputed market makers. Okay? There was a letter that went out. Some of you saw it. I'm not going to say the name, but it was kind of a dig on me, I guess. Some of you seen it. You know what I'm talking about, where they compared the stop hunts to the weather. This was the chart. Anything that measures the high or low will look like this. It's a parlor trick. We measure the highs and lows in weather similar to how trading is measured. So obviously a chart where the weather has one day where there's a freeze or one day where there's a spike in the temperature, if you're measuring the highs and lows, it's going to look like this. Okay? Keep that in mind. Bad-mouthing me doesn't change the fact that I'm right. And I'm not trying to sound arrogant. I'm just telling you guys, I have been called crazy, well, my whole life, but in my trading career for a long time. I'm not offended. I know what I know. And the reason that people don't want to believe me is because there's so much information out there that's on the other side of this line that we draw in the sand between market makers and retail traders. Okay? Bad-mouthing me with weather charts and things that say the market maker doesn't exist and it's random is simply an excuse for your own shortcomings. No offense to anybody. If you don't see what I see and you struggle with the method, of course it's easy to point the finger at Steve and say he's nuts and that, oh, look, this is a weather chart. Take the low off the stop hunt from the weather and trade it. And by the way, just for the record, if you could trade weather, I went long right there. All right? After the market makers went into consolidation after forming the low and spiked the stop hunt, I took it, man. And I traded weather long, and guess what? I hit the sun. All right, man. So anyway, look. The same day that this email was distributed, or newsletter, or whatever the hell it was, this is what happened in the market. And by the way, the letter said that the market's random, I'm crazy, and that there's no such thing as a market maker. He's the boogeyman. Pretty much what they said, right? Okay, so the same day that this was written, this is what occurred in the market. It cracked me up. All right, look. One pair. USD CHF. Can you see the red? JPY, head and shoulders to the low. 3 hits to the low. Hit the high, back in the consolidation. Euro USD held a level during U.S. session. During London, it moved in the U.S. session. Same thing, right past the 4-hour. Consolidation on GBP CHF, and then they worked it into the stop hunt zone box and dropped. Spiked to the outside, ended the day in consolidation. It's kind of funny, man. All right, here's GJ. Same thing. Perfect W formation. This was on March 19th. That letter came out like the 18th, and this is the 18th going into the 19th. Anyway, some of you seen it, some of you didn't. It's not important, but the bottom line is, look, it goes on and on, man. It's actually hilarious. And then I received some of these emails. Steve, I finally doubled the demo using 2% risk. Respecting it like a live account, it has been tough, but now that I have done it, I feel I'm more confident in doing it with the live account. I am getting it. With the help of the DMR crew and you, thank you. Well, that was a beautiful letter. Thank you. Steve, thank you for your commitment to make everyone successful. This is way above and beyond any other trading school. I like to think that too. Since beginning of the year with Jim on board, the DMR, my trading has turned, and I've had 2 positive months in a row with consistency and feel I'm starting to turn the corner. I would say so, buddy. You are turning the corner. And this outside structure to the high was a perfect trade that a buddy of ours took, and he got stop hunt to stop hunt. He spiked out at the open for his plus 50. Nice trade there. So anyway, Still think it's random? I know you don't. I know your guys are on my side. You wouldn't be here. But here's the point. Don't let the negativity of the naysayers get into your head. You guys have enough baggage and shit to overcome on your own. You don't need these other people telling you and putting ideas into your head. Because they don't see it doesn't mean you can't see it. And if you're struggling, we're going to change that. That's why I'm here. That's why I'm committed to you guys on Sundays. All right, that's enough of the mail. Let's get this shit behind us. I wanted to respond to that letter. It came out. I thought it was pretty shitty. They're former students of mine, by the way. Well, actually, they're still students of mine. They're welcome here anytime, but they put this letter out and pretty much made a dig on me, and I just wanted to throw it out there. All right, forum privacy. Listen, I'm letting out my videos, my recordings, and you know what happened last Sunday. By 11 o'clock, this recorded session was out there already. So I'm trying to protect everyone's personal data, my material, the class videos, and the bootcamp segments. So for now, I need to leave it set to private mode. Some of you asked me why you can't PM people and go through the database and stuff. Just understand I need to leave it like this for a little while. We're working on things. I'm actually considering changing the whole forum over to another venue. I'll let you know. We're working on it. So all this bullshit can stop with the IP addresses and the lockdown, all the garbage. I'm tired of it. I know you are too. It's frustrating. It cracks me up when I can't even log in my own forum and I got to wait an hour for the thing to reset. Because I tried to log in on my iPhone or something, you know. I know it's frustrating for you guys and I appreciate your patience. So I'm in the process right now of trying to find a more secure venue that will give us some of the freedoms back that we had in the beginning. Okay? So work with me on this. All right. I think that's it for housekeeping. All right. So went over mail, the giveaway, housekeeping. Okay. Market Maker Bootcamp today. R&D. We're going to look at some of the homework that was done. We'll talk about the weekly cycle some more. We're going to cover flashcards, and then I'm going to cover the trading zone. That's the schedule for the next few minutes, or for the next hour and a half. We'll go from there. All right. Paper's out, ready to go. Okay, what I want you to start to do is look at the weekly cycle on a 4-hour chart. Okay? Write this stuff down, and then I'll show you some examples. What I want you to do on the 4-hour chart is block the first 8 hours off. Mark the high of the first 8 hours and mark the low of the first 8 hours, 2 bars. This, in essence, is the accumulation phase of the week. It's like I told you last week, it's the Asian session of the week. And it's ironic that it starts at Asia. Why 2 bars? 2 bars represents the Asian session, 8 hours. The first 8 hours in the accumulation phase of the market forms the psychological support and psychological resistance level. Do you understand? There's a perceived support and a perceived resistance that accumulates in the first part of the week. The dealer has to exploit those levels in order to get people committed to the game, spend their money, the things that I've talked about before. What they will do is they will trade away from those, trigger the stops, the same things that happen intraday. You count the first 2 bars at the tracer. Okay? Let's look at it. Let me grab my pen. Okay, so in essence, here's the first 8 hours of the week, right? Okay, now, there happens to be a line here. Let's just draw the line like this, pretend. Here's what you got. Look. Accumulation phase, first 8 hours of the week. The dealer hits the stops on the psychological resistance level. He drags it away and breaks the psychological support. Okay, it forms the midweek reversal and trades back into the range. After the false move week beginning, you trade away from the initial high of the week. Okay? You have your 1, 2, 3 pushes in here. The dealer ends back in consolidation. This is the week, right? This is an entire week. But this is the same exact behavior that I've illustrated for you intraday. Yes, Ben, it is this easy. It really is this easy. It's just you got to open your mind and try to see it. Look. Here it is again. First 8 hours are blocked. Psychological support, psychological resistance. Dealer spikes high, grabs the traders. He doesn't make 3 levels, but he makes a sloppy W. Comes back late in the week and hits it again. This is like GBP this week, by the way. So if you took a trade here, you probably bagged. When he comes back to the level and doesn't take it, you got a trade right here. And in 4 hours, this one paid out huge. Goes into consolidation. Ends the week after he picks up the pendings from the previous level, right? It's all about perceived support and resistance. Most traders fall for these moves. I can't say this enough. Most traders fall for the garbage. So if you understand what they're doing and don't fall for it, identify the pattern on a larger time compression over the course of the week, and you could project where the dealer is going to go for the week. You understand? I know it's like, oh, Steve, it can't be that easy. It really is. It's simple. Okay? First 8 hours, perceived support and resistance. What does the dealer do? He railroad tracks past it, which 8-hour railroad tracks, right? False move week beginning. He rises up only 2 levels. He hits it outside structure to the high. 1 push, 2 pushes, 3 pushes to the low. Dealer ends back in the range. Exactly in the same level he started, but not quite so high to let out the long holders. Okay, 4-hour chart, my friends. Pay attention, because guess what the homework's going to be? Okay, a choppy week. Not as clean, not as beautiful, but guess what? Psychological support and resistance. Accumulation phase of the market, first 8 hours. Dealer sets the level. The market maker spread is set for the week in the first session of the first part of the week. Remember? 8 hours. Do I have to do it for you? Accumulation. Market makers hit the high, hit the low, form the spread. They hit the stops. They rise. Most of the time, 3 levels, textbook. They pull back, end the day back in consolidation. Every one of you that's here saw me draw this for you in a sales presentation. Okay, so what I'm asking you to do is to understand this segment of the market intraday and apply it to a larger time compression, 1 hour or 4 hour. 4 hours easier to see when you look at it like this. It's a different take on it. And understand that the pattern that Steve sold me on is the same exact thing that the dealer does over the course of the week. The dealer accumulates and sets the spread on the first day of the first part of the week. Then he will make a unidirectional swing away from those psychological support and resistance levels to trap the traders and make them make irrational decisions. Burn your margin, lift your stop, and do stupid stuff. I'm trying to figure out a way that whenever I post a chart to email the masses so you guys know that I was in the forum and you can go have a look. Some of you may or may not have seen my CHF chart, Swissy chart, where I put what the dealer was saying and what the traders were saying. If you did not see that, I invite you to go into the forum under Swissy for the answer and have a look. All right? It's the psychological battle that's going on between the traders and the dealers. I'm going to post a lot of those up. I'm going to start marking them down and show you what's going on. What I'm trying to get you to do is see the market in a different light for what it really is. Okay? Same thing applies here. The dealer shows short. Understand this is a larger time compression, so this is a couple hundred pips to the downside. The dealer breaks the psychological support level and runs down. Right? He then spikes it again. This is the same pattern I've shown you 100 times intraday, right? He runs up a couple hundred pips, breaks the psychological resistance level, forms the M, the perceived continuation, shifts the zone in 4 hours, one big drop, and ends the week back in consolidation. That, my friends, over the course of the week is this shit that I've been drawing for you since you met me. So now, let's think about this for a minute. And I'm going to make some slides for this, but it's occurred to me a couple days ago, I've been thinking about it, is that everyone knows the lot sizes on a platform. You have micro, mini, and standard, right? Let me write it down. Micro, mini, and standard. Those are the 3 lot sizes on a platform. Now, think about this for a minute. There are 3 variations of my pattern. Micro, mini, and standard. What do I mean? Micro view of price action is the little patterns intraday that Kim K calls the pushes. That's the micro view of price action. The mini view of price action would be the entire day collectively. Stop hunt, low rise, stop hunt, high drop. End the day back in consolidation. This pattern right here would be the mini view. When you switch to the standard view, you're looking at the course of the week, which is the same pattern over 5 or 5.5 days or 6 days, whatever you say that the Forex market trades. So the micro view, the pushes intraday, the mini view, the intraday structure and pattern, the standard view, the entire course of the week. In order for you to be successful at the method, let's try starting at the standard view, which is this big view right here, and then drill down to the mini view intraday looking for the stop hunt, and then the micro view understanding the pushes. Start with a big picture and scale it down, crank down your microscope to the micro view. And I'm going to add this to my teaching. I think it's helpful. Maybe not. I don't know. The biggest problem is understanding where the peaks are, the high of the week, low of the week, and trading away from those areas. And that's, I talk about legendary. That's what Sunny does, and made her successful. So I want you to understand, the first 8 hours is the accumulation phase of that particular day, Sunday. Right? Let me clean this up. You guys remember tonight is like the breakout session, right? After I'm done, I'll take a break. And Zen's going to come on, Cars are going to come on, and then tomorrow night we have another 3-4 hours of training, right? We got Ray, Kim, and Jim tomorrow. I had to get a sip of Diet Coke. Okay, so listen. When you mark these charts up, go back and block off the first 8 hours. Take a horizontal line, run it across here. Take a horizontal line, run it across here. The first 8 hours, I know it's crooked. The first 8 hours. Now, what are you looking for? The dealer exploits the psychological accumulation phase of the market by cutting the support level. When he cuts the support level, there's some hunk of traders, a group of traders that are jacked up and take short positions. Look at the CHF chart that I marked up if you haven't seen it. The dealer shows you something Sunday and Monday to make you think that you got to get short. Excuse me. When you get short, and I'm talking about old retail traders, not us, we know better. He comes back to the level and spikes it. He hits the stops of the people that got it right long in here. Right? Think for a minute. If people got short here and some people got long here, what's the next move for the dealer? In order to take those people out, he's got to come back and hit the stops. Hence M or W. That's where the M and W comes in. And if I know if the dealer goes back there and spikes the level and closes back above, that is a high probability trade. That's why I always tell you second leg M or W. And if you understand what I'm saying, if it really resonates and clicks with you, you will understand. Stop taking shit and start taking second leg M or W. And all this aggravation that I'm causing myself will disappear. And if the light bulb just went off, congratulations. This is what I want you to understand. This is why M and W, because the dealer makes a fake move. A lot of you go, oh, I saw a little accumulation, Steve, and I took it back long. Then what happens? You get stopped out over here and you curse me out. In 5 different languages. I think 20 different languages. You guys are from all over the place. Then the dealer comes back and spikes the level, hits your stops, and you fell for exactly the shit that he was trying to accomplish. If you wait for the second leg, most of the time, with the exception of the third leg, which doesn't happen that often, you are going to make money. Here, you took this here short, and then what happens? The dealer comes back towards the high, forms out the M pattern, and then corrects big. This is where you should be in, here or here. You understand what I'm saying? Okay? All right. Let me open up the question panel for a couple minutes, a couple seconds. All right, open, close. No, I'm kidding. All right. This is helpful to someone like me who only has a few hours in the agent session. Yes, Bruce, absolutely. Take a look at the big chart. Look. When you're looking at the 4-hour chart, this is what I want you to identify. Here you go. Block off the first 8 hours. HOW, high of the week. How? How'd they do that? Okay? Try to count your pushes. You're not always going to get them. This does not issue you a second leg. Low of the week. What are you supposed to be doing? You're supposed to be trading. After 3 days of drop, you're looking for a long signal. False move week beginning. Dealer cuts the psychological support, resistance level. Sorry, I hate those terms. I don't know how to use them right. Resistance level. You're looking for an opportunity to trade down back towards some type of target. Okay, good question, Callie. We're looking at the first 8 hours. Yes, the first 2 bars of the beginning of the week. 4 hours, 8 hours. Right here, that's it. Block off the first 8 hours. It's the psychological support and resistance level. Is it going to play out exactly like this every week? Of course not. As soon as I say it, it probably won't do it. It's the way it always works. And then you guys will be back to Steve's nuts. If I know that these railroad tracks are forming on the 4-hour, I have my directional bias for the week now, right? Stop hunt, high drop. Stop hunt, high drop. Turn into W formation looking for reversals, level 3 trades. Okay? No problem, Mike. Lewis, yes, you can use a 1-hour chart, but some people aren't getting it on the 1-hour chart, so I set up the 4-hour chart for you. If you can see this on the 1-hour chart, then you block the first 8 bars. Understand? Yes, Susan, the week can start any time. They can move the cycle over. In fact, that reminds me of a chart that someone sent me. Let's look at it. Okay, AJ, their days were off a little bit. Okay, I have to laugh because I think it was you, Susan, that asked me about AJ last week. So here you go. What's the difference if they move the midweek reversal to Monday or Tuesday? And then they drop, stop hunt, high drop, stop hunt, high drop, W formation, end the week. Think for a minute. I've told you this 100 times. Time is our problem. It's not their problem. Okay, what does it do blocking the first 2 bars? The first 2 bars are the market maker spread for the beginning of the week, right? The first 2 bars are the psychological support and resistance level that the dealer... Let me get this out of the way. All right, I got to change back to a crosshair. Close that. All right, here we go. Look, here's the first 2 bars. The first 2 bars are the accumulation phase for the week. So if you understand that, look, that's your support, or resistance rather. Here's your support, right? Psychological support and resistance. What does the dealer do? He accumulates. He adds an extra 4 hours on this example. 4, 8, 12 hours, right, of accumulation. The dealer accumulates. He analyzes the contract volume. He looks at his contracts and he goes, you know what? I'm holding the opposite of what everybody sees. In this example, if the market is net long, it means the dealer is net short. Start asking yourself, what does a retail trader see? All right, you walk in here, you look at this chart. What do retail traders see? Retail traders, the price has been going up. They made a pullback to the 50. They broke out above. That's a long play in a retail trader world, right? If the retail trader world is long, then the dealer is net short. In order for the dealer to get paid and stop out the long holders, he has to hit the stops and drop. What does the dealer do? The dealer comes out, he breaks the psychological resistance level of where the contracts are accumulated, the breakout traders, all the garbage that you've fallen for. He fakes long in 8 hours of railroad tracks. He drops. Dropping does what? It beats the shit out of all the people that lift their stops and think they're going to average in and get out. He keeps running it down for Sunday, Monday, and Tuesday. 2 or 3 days, people are exhausted. They haven't left their terminal. They lift their stop. Their account's in trouble. He gets their money, man. It's a couple of days. That's why the 3-day cycle for 3 levels. Just imagine yourself, the worst trade you've ever taken where you lifted your stop. I know you've done it. You wouldn't be here. I've done it. I'm not going to sit here and act like, if I sounded arrogant, I'm sorry. That's not my intent. I've done it. My wife has done it. You know better, but you just get tired of losing. You get tired of getting beat up, right? So you lift your stop and you watch it run 2.5, 3 days. And what do? You watch your equity dwindle and you sit there and you refuse to get up. Right? And the joke I always say is you kick your dog, slap your wife, you won't leave your terminal. Price keeps running away from you and you think it's never going to stop. You cut the trade and then you come back the next day, the dealer has formed the low of the week and it reverses. How many people do you think were in your exact shoes? Too many to count and too much money to count. That's why the dealer does it. You have to start understanding that when the dealer does this, it's an induction or inducement to get people to go the wrong way. Inducing the people to go the wrong way. When they do, they bite, they lift their stops, they do all the mistakes that are common in the business. You didn't invent lifting your stop. You're not the first guy to lift your stop. You're not going to be the last guy to lift your stop. Just understand that. Okay, he comes back for the second pass. That gets the continuation Fibonacci extension traders. And then in 8 hours, he pulls away from this level and jams everybody up and ends the week with traps. Traders stuck. Okay? It's the same thing over and over. Psychological support and resistance. The dealer fakes it low. Exact opposite. He runs price up, forms the midweek reversal. Stop on high drop, stop on high drop, spike to the low, end the week in the range. Look what happened. Net change for the week, 0. Okay, all that price action, several hundred pips down, several hundred pips up, and the dealer ends on Friday where he started on Sunday, back in the same range. So if you thought you were a position trader for the week, if you're like, oh, I'm in this now, I'm a position trader, Steve. Then what happens? You're either stopped out with a small gain because the dealer closed exactly where he started. That's why you're looking for 3 days of 3 levels. Okay? He ends the week back at the same price where he started. Very little profit seen on swing trades. Well, very little. None. How about that? None. Okay. Everybody good? I'm looking at the questions. Second leg of the W, third level, in the last example. Yes. But we look for the M's and W's on the 15-minute. Absolutely. I'm not telling you to trade the 4-hour chart. I'm telling you that to start understanding the course of the week. When you start looking at this shit on the 4-hour chart, you're going to be like, it's the same thing over and over again. This is all they got. Remember what I tell you, what does the dealer have? Stop on high, stop on low, trade in the range. That's it. It's all he's got. Yes, the target for swing trading has not changed. It's 3 times ADR over 3 days. The gap is not really shown on a 4-hour chart because it's absorbed inside that candle. Thanks, John. It's making some sense. Glad to hear that. Okay, all right. Good stuff. Let's move on to the next thing. Weekly cycle compares to what, Alex? I don't understand the question. The lights are on. Sounds good. Yes, this is what you're trying to do, man. You're trying to understand the dealer's behavior. When he forms the low of the week, you have a directional bias for the next couple days. 2.5 to 3 days. Day 1, day 2, hold the level in day 3. This is day 3. Now, if you took a swing trade here, you're looking for the door in this consolidation zone. 2.5 to 3 days of rise. ADR times 3. I write terrible, but ADR times 3. If ADR times 3 is met, or not met, but the 3-day time window is, and you get an outside structure high, you better take your money. Okay? And go the other way. Trade both ways. If I told you that there's a low of the week and a high of the week and the dealer trades off of those numbers and back and forth, what are you afraid of? Just sticking with the trend. You're a trend trader. Remember, I told you last week, I bestowed upon you trend trading. The only difference is you're trend trading with the dealer. You're trading the dealer trend, not the retail trader trend. Okay, Greg, it makes sense and says that you always pick the one that doesn't move. All right, here's the remedy for that, my friend. If you're a one-lot trader, just for an example, break it into 3 pieces, trade 0.3s in 3 pairs. I'll cover this in here, but I'm going to just say it now and I'll cover it in some of the teachings. Take a couple of pairs based off of the dollar and take a couple of non-dollar pairs. GBP, CHF, EJ, GJ. Although I really don't want you trading GJ yet. All right? Spread the wealth around. Because if you pick a pair that's in disparity, if you pick the franc to go short and the franc chops, that means that the dealer's working GBP, CHF, Euro, CHF, he's working the crosses, right? If he's working the crosses, you may not get some movement out of the major that you picked. Okay, I'm going to address the work time ribbons. Hang in there. Okay, yes, Joe. All right. I'm hoping you're starting to see this. Okay, flashcards. A lot of you posted them up there. They look good. All right, one or two more questions. Tommy, let me read this real quick. Yes, Tommy's saying that you don't always get 3 levels of rise or 3 levels of drop. Of course. But you're trading a signal based on a bias that you formulated, okay? You're trading away from the peak. So here's what I'm telling you. You have the high of the week forms, right? Same pattern that I've been talking about. First 8 hours of the week, first 8 hours of the trading day. Micro, mini, and standard view. Okay? You're looking for this. Now you have your high of the day and your high of the week. Don't forget that stuff is going to correspond. The high of the day is also going to be a high of the week. The dealer's going to pull away. We expect this, and then we expect this, right? If he doesn't do this, guess what? There's no trade there. You don't trade. That's what I'm trying to get through your thick skulls. I've got a lot of emails that say, Steve, there's only 2 levels of rise there, and then the dealer cut the low and he didn't do what I expected. And I got stopped out. Stop trying to impose your beliefs onto the pair. Let the pair show you something and take the trade. If the dealer cuts the high at the beginning of the London, You sell. If he extends the low at the beginning of the session, forget it. Why? The dealer extended the low. I don't know if it's a straightaway or if it's a stop hunt. So I don't take it. I only took one trade this week. I'll show it to you guys. One trade, that's it. Between writing, answering emails, I saw one good setup. Australian USD, 3 days of drop, perfect W formation, back into the range. Snagged it. Go look at it when you have some time. I'll show you the chart before we get out. Actually, I think I have pictures of it. All right. I'm going to close the chat box and get back to business. Flashcards. Okay, we'll do flashcards and we'll take a break. A 10-minute break. I'll grab a soda. Duh, right? No kidding. All right. Flashcards. I asked you last week to make 40 flashcards and identify one good M, one good W, right? So now here's what I want you to do for the week. I want you to take those flashcards and I want you to open them in Paint. If you have a Windows computer, you have this program. Go in your Explorer bar and type in Paint. It'll come up if you've never seen it before in your life. What I want you to do is I want you to block out all the data on the chart from the point of entry. I want you to compile them into a book of longs and a book of shorts. And then I want you to identify a signature trade out of there. Here's what I want you to note on the cards. The time. Okay, someone asked me a question. Hey, Steve, I took this trade and I don't understand why it didn't pay out. And I looked at the time and it was 2 o'clock in the afternoon. The timing element. Remember what I told you? I have to say top 3 things about what I've taught you. The pattern, the pattern, the pattern. 4, time. 5, levels. A distant 5. The pattern, the pattern, the pattern. Timing, levels. That's the business. Okay? Write this stuff down, man. Time, don't forget it's recorded. So we are 50 minutes in. Mark the tape. Time, position of the indicator, vectors, Asian range, distance out of Asia, type of trap or structure used, M or W. Candle pattern. Robert, have I ever left you hanging without a sample? Pay attention. I promise you, if I don't give you an example by the end, you can come over here and beat me up. I'm not going to tell you something without giving you examples. Just relax, give me a chance, pay attention. All right? Hey, what's that? Flashcard sample. All right. Here's what I want you to do. I want you to take the cards that you've done, your sample cards. You should have taken pictures of half Batmans, good M's, good W's, good entries. This is an M. Stretched it out here. It's hard to see. Okay, can we agree that the entry is either one of these 2 hammers, right? We can agree on that, right? Why? You have the vectors outside to the low, past the 200, in the shadow. The dealer pulls the level, outside structures into consolidation. He comes back towards the level. The indicator gives us the signal. Okay. Mark the tape. Go back and look at it. I don't know why I forgot to close the chat box, man. I'm sorry. It's driving me crazy. I'm closing it right now. Whitney, mark the tape. 50 minutes in. Go back and pull the information. Okay? Have a lot of stuff to cover and it's too hard to get through it. Now, here's what I want you to do. I want you to block off. We're going to do it. Don't worry. We're going to do it in here. I want you to block off where the perceived entry is. This is what it looks like. This is what the indicator looks like. This is where you are, what you're seeing on the chart. This is a retail trader's downtrend. Perceived support and resistance. Accumulation. Spread. 3 vectors to the low. Outside structure to the low. Asian range, what is it? 41 pips. That's good. Steve said less than 50. 3 vectors past the mayonnaise. Outside structure. In the brink shadow. Below holes for 1 hour, 30 minutes. TDI is below the lower support band. Very important. Why? In order for TDI to get below the lower support band and above the upper resistance band, you are probably at level 3. Let me say that again because it's important. Because you guys take trades, and then you don't understand why the M or W didn't work out. You traded the pushes, and you had one more push left. Okay? The TDI is below the support band and above the resistance band outside of the volatility band. Okay, that's a mouthful. If it's outside the volatility band and below the lowest support and above the highest resistance, you are probably in level 3. Okay. So what else do you have? You have shark fin, blood in the water, 50 pip stop hunt, the distance. The entry is executed on the green hammer. Stop loss was 18 pips right there. All right, that to me, if there was a textbook, this would be in it. Now, here's what I want you to do. I want you to compile these into a book that should look like this. I don't know if you can see it or not, but you have your short trade sets, your long trade sets. And in here, I want you to mark your signature trade for each one. Move those to the top of the stack. Okay? It's for you. Answer the phone. There's my webcam right there too. If you're wondering, I know you're gonna analyze this picture for days. It'll be on the internet tomorrow. There's my calculator to count the pips, and there's my look. Is that anal or oh yeah, my Diet Coke too. Look, there's my little pens and pencils sharpened. My wife makes fun of me, man. Yes, I recommend a case of Diet Coke right there. All right, that's what I need you to have. Now, you're trading along, minding your own business, and all of a sudden something that looks like a flashcard that you did looks familiar to you on the chart. Open your chart, hold it up to your chart over here. You're like, wow, that looks vaguely familiar. There's a W right there. That looks like the same shit that Steve was talking about in class. Hold it up there and go, man, that looks like a good setup. And take it. Okay? Compare notes. This is the only trade I took this week. I took Australian off a safety trade long. I'll show you guys. Okay? This is what you need to do. And hopefully, you'll get the thumbs up. By the way, the photography is by my wife. Look at my reflection there. I thought that was pretty good work. It drove me crazy trying to get it, but it was a pretty good picture. All right, that's what you're trying to accomplish. That's the point of this. Take these setups, your little book that you compile, and memorize them. Leave them in the restroom. Leave them somewhere. I don't know if you guys read in the bathroom. Some of you ladies, I don't know. Leave them in there. And when you're in there hanging out, maybe make another set so you have a non-contaminated set and a regular set. Yeah, I have HP 27s. Tape them to the fridge. Use magnets. Don't use tape. And then hold them up to your screen and make sure that what you see matches the successful trade card in every aspect, including the level of the indicator. Okay? They have to match exactly or they're not going to work out. In every aspect, the timing element, the level of the indicator element, the blood in the water, the shark fin, all those things. All right, let's make a card right now. Let's do it. So here's the notes. Open the snapshots that you made this week using Paint. If you don't know how to find Paint, go to Explorer and type in Paint, it'll come up. Mark the proper trade entry. Block out the data to the right of it. List the things needed for a solid entry. What's your criteria for a good entry? Okay, so here, let's do one. Let me pull up my flashcards. All right, here we go. Can everyone see that? Okay, thank you. All right. Let me lower. We agreed that this was the entry, one of these two hammers. Let's just say it's this one. Okay? Now, go up here. I got to get out of this normal drawing. Okay. Let's do this so we can see the bottom of the chart. Okay, now, grab this box shape up here. Okay, it's the 1, 2, 3, fourth shape over. Grab it and click on it. You're going to get this little arrow marker. Okay, let's say we got in on the green candle. And let's draw the box for the green candle. So let's do this. Okay, raise it up to the top. Pull it all the way over to the right. The data is gone. Let's adjust this to the perfect entry point. Okay, on the close of the green candle, you entered the market. All the other data should be blacked out and give you a writing surface. So go to Fill, Solid Color. Pick the same color as your chart, gray, blue, green, whatever you're using, black. So let me mark the color. Fill it up with solid. That's it. The information's gone. Simple. Don't forget to save it. Okay, now, you have a writing surface over here. Grab your text and mark on here what you have. Asian range, 40 pips. Okay, I forgot one important element. You got to change the color back or it won't type any color. So go here. Okay, first question. What's the Asian range? Asian equals 41 pips. Looks good. Okay, what's the next thing? Dealer cuts the low with 3 vectors. All right, what's the next thing? All right, all the same reasons we went over. Dealer cuts the low with 3 vectors. He holds the low for an hour and 30 minutes. He comes back towards the level, issues 2 hammers back to back. I'm in. TDI is below the lower support. Shark fin, blood in the water. Stop hunt in the shadow. Okay, the low, first leg of the low is formed in the shadow box at the appropriate time of day. These are the criteria that's set up for a trade. It's perfect. You take it. Now, when you hold your chart, this chart up to what you see, it should match identically, including the indicator. The indicator is very important to match. If the indicator's up here doing this crap, there's a chance that this is a push, and what will happen in essence is this. Okay? All right. Everyone good? See how to do that? Okay. Save your flashcards and mark them up. So you should have, in essence, some flashcards that are labeled and you should be able to go through all your cards. These are my cards, okay? Perceived support and resistance. This is an outside structure to the low, outside to the LOD. Same exact thing. Held the level to the next session. That's the trade. Very similar. This is December. Isn't that a similar pattern to what I just showed you? Okay? Perfect M, 3 hits to the high. Snagged them on the railroad tracks. M formation, 3 hits, TDI is extremely divergent. I grabbed them on the close of the railroad track. Okay, out here at the watermark. Look at this one right here. The dealer kept hitting the high, and look at TDI. M formation with divergent TDI. Notice TDI is very high. Look at the level. This was before we started using the double bands and spread it out. This is closer to Dean's version. Okay, this is the stuff you have to learn how to identify. Okay, cow on the lod. What the hell's a cow on the lod? Cord of wood to the low of the day. Beautiful. Okay, in and out. So if you don't know what a cow on the lod is, now you do. Not going to go through all the cards. This is exactly what Euro did this week. This is Euro CAD. He went slightly above the Asian range. He made the vector outside structure to the low. Came back right before the U.S. session at 9:30. Got him. Okay? Look what he did here. Here's the pattern. He grabbed the pending, spiked to the mayonnaise, hit it here, runs right up, hits it again, both directions in the range. Had to take a little heat right there, but the trade ended up paying out. How do I know the trade's still good? Anybody? The dealer didn't break the high on the second pass. Trade's still valid. Okay? Look, I'm human. Got in on TDIW too early. Look, this is what I saw. I got excited, just like you, got in too early. Stop is below the low of the day. I took a little heat, but I was good. Okay, just happened to be there when it limited up, snapped the picture. Okay, this is my book, man. This is my flashcards. Look. Steve, I shorted here. Why didn't it work? It didn't work because there's no second leg. And you're getting into the session changeover. Well into the session. Look. 1, 2, 3 pushes. If you didn't limit up, here's the exit and consolidation. The dealer comes back to the high the next night. That's a multi-session M22 trade. All right, a couple more, man. I'll do some more next week. Same thing. This one was in the forum. This was right back to the mayonnaise. Slightly below the tracer, right? The dealer makes the stop slightly below the tracer and rises. Safety trade. This is the same thing I took in Australian this week. Go look at it. Dealer makes a peak formation low, comes back 50 to 75 pips off of the level. Stop hunt, W formation, rise. All right, last one. I don't want you to trade these right now, but understand this is the same behavior. Out to the mayonnaise. Stop hunt to the 50 EMA, out at the Mayo. All right. It's a good place to take a 10-minute break, and then I'll get into the regular stuff. Let me clear the board of all these photographs, and I'll open up the lessons. Let's do 10 minutes, okay? All right, let's do this first. Any questions? You know how to make a flashcard now, right? Okay, look. If you don't do it, it's not going to help you. You have to learn the patterns and the behaviors, man. You have to. You have to see what the dealer does. You have to make the flashcard. Okay? All right, here's what I want you to do with the flashcards. I'm going to give you the homework, then I'll give it again for the break. Let's go to this chart right here. Okay. Research and development for the week. Do 4 weekly cycle markups on the 4-hour chart. Do 1 in each major. All right? Any date range you want. That's the homework for the weekly cycle. I want you to try to start to understand the bigger picture. We're gonna do standard, mini, micro. We're gonna dial it down. But I want you to understand the standard view, the big view. You have to understand the big picture. Psychological support and resistance, first part of the week, accumulate. The dealer builds contracts and he exploits those levels. He hits the stops, drops, hits the stops, and rises. He'll form the low of the week or the high of the week and trade away from that range for a couple of days. He might go back to the level. He might go back and repeat the same high or low. The reason is because there's orders built up there. There's stops that are there. So he has to go back. Okay, a couple of questions. Want to know how to read the TDI level lines, so please define cord of wood. Tom, the cord of wood is when the dealer just lays on the low or lays on the high, and he forms like what looks like a cord of wood, just all sideways logs. Right? When you stack a cord of wood, it's just sideways. So the dealer would hit the level and just lay there. Okay, you mentioned to trade €1 and 2 others. No, I mentioned to trade a combination of USD base pairs, a couple of the majors, and then a couple of crosses. Why? The dealer works the fractional disparity with the major. So if he's holding euro, for example, then the trades will establish themselves in any euro cross. Euro odd, euro CHF, euro CAD. That's what I'm talking about. Okay? Okay, first 2 candles at the start of the day, correct. Yes, the first 8 hours of the day. The dealer will set the market maker spread. Whitney, I should yell at you. What do I mean, position of the indicators? Position of the averages. Yes. Here's what I mean. The position of the indicator, is the indicator flopping around in between the bands? Or is the indicator, here, let me get a picture of one. Okay. Here's what I mean. We're not on the break yet. Hold on. Back up one more chart. All right. Grab the pen. All right. Here's your indicator, your subgraph, right? You have the center line and you have the higher bands, okay? Position of the indicator would be the RSI line breaks outside of a band and it's well below the support line. I am going to cover TDI later, but just so you know what I'm talking about. When you find the indicator overextended, overbought or oversold is what they technically call it, when it's overextended well below, most of the time, remember I just showed you the 1, 2, 3 in the indicator? In order to get at the extreme, at like plus 10 or plus 90 or 80 something, very high on the chart, in order for it to get into the extremes of the zones, you're most likely finding yourself at level 3. Okay? That's what I mean. Do you do flashcards on the 4-hour, 15-minute? 15-minute, man. The flashcards are on the 15-minute. You're looking for perfect M's and W's. Obviously, you have hindsight in your favor. Don't take pictures of ones that didn't pay out. Take pictures of the perfect M and W formation that you know paid out. Now you're looking for the characteristics of why that paid out. In essence, it's a checklist for you mentally. If you know that the perfect W formation vectored to the low past the mayonnaise, and you saw the hammer in the second leg, you block out all the other data. Now, if you're sitting in front of your screen at 3:30 in the morning inside the shadow box, and you see that exact pattern again where the indicator is below the support level and a W forms second leg, you hold it up. Don't you get the joke? Look, you hold it up and you make a moron out of yourself. And you go, hey, that matches exactly like my signature trade. That matches exactly like the perfect W formation. And there you have it. Actually, having the ones that do not pay out is useful too. Peter, no, don't do that. Here's why. Don't memorize the wrong shit. You're wasting your time. I want you to get all the negativity, all the losing trades, all that stuff out of your mind and only take the good ones. Having a flashcard of a loser is not going to help you stay out of it. Because you're not taking those. You're only taking the ones for certain that match your paid out flashcards. Don't you understand? I don't want you to build patterns in your mind of losers. I want you to build the patterns in your mind of positive trades. Eventually you will throw the book away in the garbage because the patterns will be in your head. You're going to say, your checklist is going to be Asian range less than 50 pips. Dealer vectors 3 bars to the low. I see that. Dealer pulls back, 25 pips off of the low in the shadow box and hits it again. He just misses the low of the day. He issues a hammer. TDI is at minus 10 or whatever the number is at the bottom, 10. It's below the support ribbon. It forms a W. There's a shark fin. It crosses back in, hits the bloodline. That's a trade I want to take. I've seen it 100 times when I was in the bathroom looking at my flashcards. Memorize the winning, productive patterns and take all the other negativity out of your life. All right, I'm not ripping on you, Peter. I'm just saying I don't want you to waste your time taking snapshots of garbage that doesn't work. I want you to focus on 4 or 5 good longs, 4 or 5 good shorts, and only take those trades. Okay? That's where patience comes in. How many should you have at the beginning? Very good. 4 or 5 longs, 4 or 5 shorts. Out of those, identify your signature. TDI is 68 and 32. Above the 68, below the 32. But I like to see even like all the way to the extreme, man, almost bouncing off the bottom. All right? Yes, Terry, I will. All right, Richard, good. You figured it out. Okay. I went a little long. It's a good place to take a break. Okay, Trudy, I'll look into that. I'll have Zen take a look at what's going on with that. See if you're trading 1 in 4 hours, would you do flashcards on the time train you're trading? Absolutely, Dave. Very good point. Some of you are swing trading. You're trading on the higher time compressions. Then make your flashcards on the compression you're looking for your entries. If you're going to take a 1 hour entry, then your flashcards need to be 1 hour entries. Here's why. The 1 hour chart and 4 hour chart will show more railroad track sets than they will M&W formations. Because those formations happen within a 4 hour time span, you will only see 1 bar dropping, which is a railroad track. Okay? All right. Okay, so we're going to take a break, I guess. Let's do a 10-minute. I'll grab a Coke, clean my screen off, and pull up the next, what did I say? Repeat what again? Signature trade? Oh, work time. Let's go over 2 more things. I'll take a break. The work time ribbon. I posted in the forum the update for that, but here's the deal. The student folder is not ready yet. It's not that I'm lazy. It's that I'm having the same problem you guys are having with the work time ribbon. More emails are generated about the work time ribbon than anything else that I've ever read in my life. That's not the purpose of the work time ribbon. It's not to generate emails and to keep you confused. That's not the point here. I'm working with Ray, and I'm trying to figure out the best way to either make a standard set that when you put it on your chart, it just hits the tracer on the left, and it's good to go. We'll figure it out, but I'm not going to post the student folder until that shit's fixed because it's going to generate a ton of unnecessary emails. So I'm going to figure it out with Ray over the next few days, few weeks. I don't know how long it's going to take. In the meantime, use the original gray template that you got in the student folder. There's nothing wrong with that. It's fine. But I want to get this work time ribbon organized so that it stops falling off the chart. It stops moving. I don't know if there's a bug in the code. We'll get it figured out, though, okay? I promise you that. And you know I do what I say. I'm going to get it done, and I'm going to get it right so this stuff stops, okay? All right. Let's see. Signature trade. Signature trade is a trade that you see crystal clear. It might be a 22. It might be a spike to the mayonnaise. Alex, I'd love to hear about it. Please send it to me. Scott, let's see. No, you're not. You just got to get used to using this stuff, man. You know what? You're going to have to just step up and learn the platform and take some time doing the things that you need to do. Listen, if you're struggling with the platform and basic computer stuff, you got to stop what you're doing and work on that skill in order to move into the next level. And I don't mean any offense or disrespect, but if you can't move a mouse around work the platform and handle paint, obviously you're going to have a hard time making the cards and doing things. I understand you're frustrated. The recordings are going to be up. Take some time, block off some time on Sunday or Saturday, and mess around with the computer for a couple of hours, okay? Yes, Compass has some videos on how to use the platform. Michael, drop another template on there and see if it reloads the boxes. How many times can you enter? Lou, as much as your margin can take. For you, everybody else, no. All right, Lou, you enter 2% risk, man. As many lots as your account will bear, up to 2% risk. If you happen to snag it very close to the high, then your lot size can be a little bigger because your stop can be 10 or 15 pips.